Now we are going to discuss about the case study in a portfolio management. In this case study, it has a question over here. It is based on an investment of portfolio management. One of your client, a retired couple in their late 60s, has approached you seeking assessment in managing their investment portfolio. They have recently received a significant windfall for the sale of family business and overlooking a preserve and growth their wealth to support their retirement lifestyle and leaving a legends for their children. These couples' primary goals are preserving of capital, the risk of adverse and priority protection for their principal investment. Next, they generating a stream of income. They seeks regular income distribution to cover the living expenses in retirement. The long-term growth, while capital preservation is per capita amount, they should recognize and they need to portfolio to grow over time and combining the inflation and supports their lifestyle. The next one is additionally they have to indicate the preference for their ethical and substantial investment aligning with the personal value. Next, they are having a different types of questions over here. In the first one is how they are construct their couple investment objectives and risk portfolio profile. The first one is their case study and portfolio profile is the first one is their age late 60s. The second one is risk tolerance over here, and the third one is financial goals and capital preservation, income generation and long term growth. The next is investment horizon, long term, which focus on retirement income, ethical and substantial investment and prefers of a high. So these are all the profile of the company. The next question is about asset allocation. It gives the risk adverse and a need for capital preservation. The portfolio should be diversified across the various assets classes to spread the risk. A typical allocation might includes the combination of stock, bonds, and alternative investments such as real estate, investment trust, and the infrastructure of funds, etc. In this allocation of fund, it gives an equity. Equity allocation is an high quantity of dividend. Pay a stock with a history of stable earnings and dividend growth. These stocks can be provided a steam growth of income while offering the potential for long-term capital appreciation. Focus on companies and with a strong fundamental and potential ethical and sustainable business practice. Next one is a fixed income for them. In this fixed income, individual of high quality of a bond funds, etc. It has an high quality of income over them because they are at age 8 of 60s and they have to give a solid income to generate for them with a mix of government bonds, corporates and municipal bonds to diversify their risk. Look for a bond issued by the companies with a strong environmental, social and governance practice over here. Next one is an alternative investment. In this alternative investment, they have a infrastructure funds to further diversification the portfolio, enhancing in income generation. These investment can provide the steady cash flow for an rental income or infrastructure project while offering an potential capital appreciation over a long time. The next question is the dividend over here and how it recommend over the preference shares. The preference share is also the more they can prefer over it, and it gives an ethical and sustainability investment for their principles because they can professionally guide according to their wants and needs, and the advisory to understand the couple goals and values can provide a priority and personalized advice and guidance tolerated to their specific needs and circumstances. Acknowledgement advisory helps to navigations the complexity of investment management and ensure the financial remains or tracks to meet their objectives over here. The objective over here of the following things of it. Next is an allocation and the specific. Next one, the portfolio reviews and rebalancing. In this portfolio review and rebalancing, at least the annual to assess the performance and rebalance as needed to maintain the target assets allocation. Factory influencing a rebalance decision, including the changes in coupled financial situation, made markets, and diversification from the target allocation due to asset performance. And it has a by implementing this approach, the retired couples can effectively manage their investment portfolio to achieve their goal of capital preservation, income generation, long-term growth, and alignment with their ethical sustainability, investing preference, and regular review and rebalancing ensure the portfolio remains on the track to meet their evolving the needs and objectives over here. So these are all the final conclusion of it. Thank you for the case study.